Okay, this is the second half of Chapter 3, Accounting, Government and Non-for-Profit Accounting. So negative balances. Negative balances. GASB does not permit the reporting of negative, restricted, committed, or assigned fund balances. If this occurs, the government should reduce any assigned fund balance in that fund by the amount of the negative balance. The rationale is that if expenditures exceed restricted or committed resources, then funds have in effect been reallocated to the purpose used, okay? So keep in mind we can't have a negative balance. If a deficit remains once all assigned fund balances are zero, the remaining negative amount should be reported as unassigned fund balance. So sources of funds, other financing sources include transfers in from other funds and the proceeds of long-term borrowing. Revenues are defined as all other inflows and include taxes, charges for service, and amounts provided by other entities such as the state or federal government. Use of funds. Expenditures are recognized when a liability is incurred that will be settled with current financial resources in the fund. Expenditures may be for salaries current, land, buildings, or equipment, which is capital, or for payment of interest and principal on debt, so debt service. Transfers out of the fund to other funds are classified as other financing uses. So, classification of inflows and outflows. Revenues are classified by source, where the money came from, taxes, licenses, and permits, charges for service, etc. May be subdivided further, such as by type of tax, sometimes shown in separate schedule. Expenditures and encumbrances may be classified by function, program, department, activity, character, or object. Outflow classifications. Character groupings are always current, capital outlay, and debt service. Current are typically classified by function, general government, public safety, streets and highways. Public safety could be subdivided by department, police and fire. Police could be subdivided further by activity, traffic, and drug enforcement. Activities in the traffic area could be divided into objects of expenditures, policeman's salary, gas for automobiles. Budgetary accounting. GASB standards require governments to be present a comparison of budgeted and actual results for the general fund and special revenue funds with legally adopted budgets. While GASB standards guide the format of these comparisons, the GASB does not prescribe budgetary accounting practices and does not require governments to maintain budgetary accounts. Okay. Recording budgets. Although budgetary accounts do not appear in the general purpose financial statements, governments typically record budgets, and governmental accounting systems are designed to assure compliance with budgets. Okay, it's about compliance to the budget. Budgetary accounts. Revenues to be raised pursuant to law during a budget period are set forth in an estimated revenues budget. An appropriation, when enacted into law, is the legal authorization for the government to incur liabilities for purposes specified in the appropriations statute or ordinance. Estimated other financing sources and estimated other financing uses are budgetary accounts reflecting anticipated inflows and outflows of resources from sources other than revenues and expenses. So those are other financing uses. Encumbrances. When a purchase order or contract is issued as authorized by an appropriation, the government recognizes this commitment as an encumbrance. An encumbrance is not a liability since the goods or Services have merely been ordered, not received. So that's what an encumbrance is. It's a good or service has been ordered, but we haven't received it. Commitments are reflected in the budgetary accounts through the recording of encumbrances and the corresponding budgetary fund balance reserved for encumbrances. So the expenditure cycle, so City Council approves the fiscal year budget for the general fund. City departments issue purchase orders for goods and services. Goods and services are received and invoices are presented for payment. This is very similar in school districts too. And also, I believe the Navajo Nation government is set up like this, and chapters are as well. The budget's approved. I think the Navajo Nation Council recently approved the budget for the 2019-2020 year. So journal entries for budgetary accounts, you're gonna, estimated revenue is gonna be debited, or estimated other financing sources, debited. Appropriations, credit. Estimated other financing uses, credited. Budgetary fund balances, credited. Don't forget, remember from accounting 200, there's debits always have to equal credits, and that's what that's showing right there. Encumbrances, control, debit, budgetary fund balance reserved for encumbrances is credit, and that is to establish the encumbrance. The first one on the left right here, that one's to record the budget. To reverse the encumbrance, budgetary fund balance reserved for encumbrance debit, encumbrance control is credited, so that just completely reverses it. Journal entry for financial statement, there's no entry. To record a liability, bottom right here, it shows expenditures current, debit, account payable is credited, so we're actually recording a liability there. Encumbrances to expenditure. Once goods or services are received, the government has a liability. At this point, two journal entries are necessary. The first reverses the encumbrance at its original amount. Since the government has incurred an actual liability, it is no longer necessary to reflect a commitment for the outstanding purchase orders or contracts. The second entry records a liability, account payable, and expenditure in the invoice. So what that looks like, that's this process right here. Okay. Let's see. Why do we record encumbrances? In business accounting, orders are not entered into the general ledger. Governments recognize that an outstanding order will turn into an expenditure and a liability when the goods arrive. To prevent overspending, outstanding orders are entered into the books. Okay, it's just recorded. Encumbrance examples. Place an order for $150,000, which consists of 3 mini buses costing $50,000 each, recorded as encumbrance, $150,000. Budgetary fund balance reserved for encumbrances is going to be credited for $150,000. So what we're doing is we're creating the asset right there of $150,000. So assume 2 of the buses arrive, but with freight they cost $102,000 instead of $100,000. So we're first reverse the part of the encumbrance. So what we're doing is we're reversing $100,000 from the above. Second, we're recording the actual amount of expenditure. So capital expenditure $102,000, accounts payable $102,000. So this is what it's talking about. So we're reversing it, and then once we receive it, then we put it in the payable. Okay. So that was what we were talking about earlier. Accounting for revenues. Since taxes and many other revenues do not involve exchange transactions, governments cannot determine the point at which these revenues are earned. Therefore, revenue recognition occurs when the resulting resources are deemed to be both measurable and available to finance expenditures of the current period. So, non-exchange transactions are transactions in which a government receives resources without directly giving equal value in exchange. So the most common form of non-exchange transactions are tax revenue and intergovernmental grants. For example, City of Farmington might get money from the county and the state and the federal government. Very similarly, the Navajo Nation might get money from the federal government, state government, more than likely federal government. Some of them they get from tax revenue from the hotel occupancy tax. They'll also get revenue from the junk food tax, things of that nature. Before a government may recognize revenue resulting from non-exchange transaction, it must meet a number of eligibility requirements. So here are the requirements. Require characteristics of recipients. The recipient must have a characteristic specified by the provider. Time requirement. If time requirements for expenditure are specified by the resource provider or legislation, those time requirements must be met. Reimbursement. For those grants and gifts that are payable only upon the incurrence of qualifying outlays, revenues would be recognized only when the expenditures have been incurred. Okay. The contingencies, resources pledged that have a contingency attached are not recognized as revenue until the contingency has been met. So those are the eligibility requirements. Types of non-exchange transactions: impose non-exchange revenues, property tax, special assessments, fines, forfeits. Derived tax revenue, sales, income, motor fuel tax, government mandated transaction, federal government requires lower level expenditures, and voluntary non-exchange transactions such as grants and or donations. Excuse me. Impose non-exchange revenue, taxes and other assessments that do not result from an underlying transaction. Examples include property tax and special assessments imposed on property owners. Also includes fines and forfeits. So here's how we will record them. Modified accrual basis recognition: record the receivable and an allowance for uncollectibles when an enforceable claim exists. Revenue should be recognized in the period for which the taxes are levied or budgeted, but are also subject to a 60-day rule. Revenue is expected to be collected greater than 60 days after the year end are deferred. So property tax levied, tax receivable is going to be debited, so we're recreating it. So don't forget, levied means we put a tax in place. So then as we receive money, then we're going to be getting money from that tax that we levied. Estimated uncollectible taxes credited. Revenue control credited. Deferral of a portion expected to be collected 60 days after year end. So revenues control, debit. So we're pulling this out because we didn't collect it after 60 days. So deferred to inflows, property tax. So we're deferring it and we're creating a credit. Okay, so deferred revenues are reported as deferred inflows of resources on the balance sheet. Derived tax revenue. These are taxes assessed on exchange transactions conducted by business or citizens. Examples include sales, income, and excise tax. Sometimes gross receipt tax as well. So derived tax revenue. So this is revenue. This is modified accrual. Okay. And again, record the receivable when the taxpayer's underlying transactions take place. Revenue should be recognized when available and measurable. Revenues not expected to be collected in time to settle current liabilities are deferred. Example, available and measurable criteria. Income tax withholdings are received, so we actually got it cash, and this goes to revenues control. That's going to be credited. Additional income tax expected to be received after year end. Part of this will not be received in time to be available for current liability. So tax is receivable. So we put into a receivable. It's still an asset. So this goes into control revenue as a credit, and then deferred revenue income tax as a credit as well. Okay. Excuse me. Government mandated non-exchange transactions. These are commonly grants from higher levels of government, federal or state, given to support a program. Since the program is required, the lower level government has no choice but to accept. For example, a state may require schools to mainstream certain students and provide funds to carry out this mandate. Okay. Voluntary non-exchange transactions. These include donations and grants given to support a program. Since the program is not required, the receiving government voluntarily agrees to participate. And here's what these look like. This is modified accrual. Revenue recognition is modified accrual. Okay, so record the receivable and revenue when all the eligibility requirements have been met. Many of these reimbursement grants, in this case, revenue is recognized only when qualified expenditures have been incurred. So reimbursement type grants, expenditure control is debited, accounts payable or cash is credited, due from grantor, debited, revenue control, credit. Here's same thing. This is modified accrual. Advance funded grant, less common, cash, debit, deferred revenues, grants, credited. Let's see. And then that was revenue, receipt of advance funding is 1. So incur qualified expenditures and recognize revenue. So 2 is going to be expenditure control is going to be debited, accounts payable is going to be, or cash is going to be credited, and then deferred revenues grants is going to be debited, and then revenues control is going to be credited. Recording the budget, estimated revenue is 12 million, estimated other financing sources 500,000, appropriations 11.7, estimated other financing uses 250,000, and budgetary funding balance is 550,000. In the above entry, budgetary fund balance is the expected change in the fund balance, assuming actual amounts are exactly as budgeted. It may be either a credit or less frequently or debit balance in the entry. Budget revisions may be necessary during the year due to changes in revenue projections or operating conditions. For example, electricity prices increases, decreases in sales tax due to low consumer spending. Okay, budget revisions usually are taken back to the appropriate legislative body for approval, although some jurisdictions may allow some percentage of the budget to be transferred between accounts. So that often happens, but not very often. Recording the budget revision, budgetary fund balance 150,000, appropriation 70,000, and then estimated revenue 80,000. Again, those both have to equal, debits equal to credits. So in the above entry, the budget reflects a decrease in estimated revenues of 80,000 and an increase appropriations of 70,000. Budgetary comparison schedule, both the original and the final adjusted budget is shown. The revised appropriations are compared to the actual expenditures for the current period plus outstanding encumbrances. A variance column is typically shown, but it is optional. So budgetary comparison schedule, the actual column should use the basis of accounting assumed in the budget. This may be different than GAAP basis. Another schedule will reconcile the actual figures on the budget versus GAAP basis. So that is the lecture for Chapter 3. If you have any questions, please feel free to email and I can try to answer those questions. Thank you. I hope these videos help.